Hello, Mr. Bagus. It is an enormous pleasure and a pure honor for us to have in this talk show. This Sunday
Good
we
morning.
are.
Good morning.
Good morning.
It's a great pleasure for me to be here.
This Sunday we are going to discuss the great early snap elections, and it would be the main focus of our discussion with you. But let me open with a general question for the whole Eurozone. What about it as a monetary union? A dream or a nightmare? Various analysts claim its presence is a guarantee against the arbitrary actions of the national monetary authorities. Others, in contrary, blame the Eurozone for generating moral hazard and postponing the structural reforms. Where's the truth, according to you?
For some countries, it may be actually good to join the Eurozone. Like if you're like a country like Zimbabwe and you have a very high inflation, then of course you can join the Eurozone. It's good for you. But if you have a sound currency, let's say if you have been like the Germans with the D-Mark, even though it's also a paper currency, it was of course not so good. There's always one construction error, or maybe it was purposely built in the Eurozone, and this is a problem if you have a monetary monopoly where the central bank and national central banks can produce the euros, but there's not one country but many countries. So there's this moral hazard in the sense that all member countries can indirectly use the printing press to finance their expenditures and their deficits. And these deficits are then paid indirectly in form of a lower purchasing power of the currency by the rest. And this is of course a huge moral hazard problem that they have tried to fix with the Stability and Growth Pact, but as this is only a voluntary agreement between the member states, it does not work. It did not work, and it will probably not work in the future. Then we have this incentive to profit on cost of all other countries by running high deficits.
You used to call the Eurozone and the Euro an entirely political project. Why so?
Yeah, if you look at the history, it is pretty clear what happened. We had after Bretton Woods, we started in Europe with European monetary system, which was a system of fixed exchange rates, which were allowed to fluctuate a little bit, but it were basically fixed exchange rates. If you have a system of fixed exchange rate and you don't want to devalue, because if you devalue, it's not very good politically for your citizens. It's like a sign that or the proof that you did something wrong, that the other countries are doing it better. So if you don't want to devalue and want to maintain the fixed exchange rates, you as a country cannot inflate more than the country that inflates less in the system. And this country was traditionally Germany. So if the French government or the Italian government want to maintain the fixed exchange rate with the D-Mark, they cannot inflate more than the Bundesbank, the German central bank. So they have to follow their monetary policy. Traditionally, the central bank with the less inflationist central bank has been the Bundesbank out of historical reasons, because Germans have suffered one hyperinflation in 1923, then a monetary reform in 1948, losing everything, all their monetary savings basically. So the Germans, and therefore it's the German central bank, the Bundesbank, were very anti-inflation and inflating less. And it was in a form dictating the monetary policy of the rest. And for example, French politicians spoke about the tyranny of the Bundesbank. Mitterrand said that you had to get rid of the Bundesbank, the D-Mark, because it was a limit on their inflation, on their government expenditures, because they finance their government expenditure through inflation. And then they saw the unique possibility to accelerate the evolution towards the single currency, the euro, when the German reunification was coming about. And then this is also a fact, a historical fact, that Mitterrand, the French president, said or asked in return for his permission for German reunification, he asked for the end of the D-Mark or for the introduction of the single currency to get rid of this economic power that Germany had on France.
Now, let me pass on Greece. There are a lot of speculations about the possible Greek exit from the Eurozone. Will it profit from such an exit? It is claimed she gains nothing and openly loses because of the relatively strong euro and the government austerity.
I don't think a Greek exit will happen. I mean, it's not in the interest of Greece, because Greece is still subsidized by the rest of the Eurozone, for one, through direct transfers, direct loans, and two, for having a stronger currency than they would have otherwise. If Greece would leave the Eurozone, the currency would collapse in value. This would mean a loss for all Greeks. The value of the assets would be less, the value of the currency would be less. They would have to pay more for imports. So the standard of living in Greece would fall a lot, and what is maybe more important, the pressure to reform, to do the necessary structural reforms would end. Normally, when you devalue and inflate, which would be the case of the Greek exit, you do it because you don't want to do the necessary reforms. You want to print over your problems. So you're delaying the problem, the end of the problem. So for Greece, it would be a huge fall in the standard of living to leave the euro. That is why I think that they won't do it. And of course, the political elites, they don't want to risk a Brexit either, because of course they would say this is a single instance, it will not happen again. Greece is singular. But of course, investors will think if Greece has exited the euro and we have had losses with Greek government bonds, maybe this can also happen with Italy or Spain or Portugal. So there may be contagion through this. And of course, there would be losses for governments because European Union governments have lent to Greece. And if Greece exits, there will be losses on these investments. So the debts of Germany, of Italy, of Spain would rise. And there would be, of course, huge political problems because, for example, in Germany, politicians have always promised, we borrow, we lend to Greece, but there will be no losses. And then suddenly when people say that there have been losses, then this is a political problem, and there will be more resistance towards the bailout policies. So this would all be a huge mess and could get out of control if Greece would exit the euro. And this is the reason why I just think it will not happen. They will not allow it.
And how about a possible exit from a general point of view? We know very well that you have written a very interesting article on this matter. On legal perspective, is it a breach of the contracts of the EU?
An exit.
An exit, yes.
You cannot expel someone from the Eurozone. There's no possibility to do that. Of course, you can voluntarily leave. You could voluntarily leave. This is possible. In theory, you would have also leave the European Union, but then you can work around it legally by just agreeing to re-enter again immediately. So legally, it is not a problem to exit voluntarily, like Germany to exit, but it's impossible to force, for example, Greece exit. You cannot say you don't comply with the rules or you lied about your statistics, therefore you have to go. This is not in the contract. So the only method maybe to induce Greece to leave would be to cut off the finance of the ECB, or the financing of the ECB for the Greek banks, and to enter the bailout funds to stop all this, to stop all subsidies for Greece. And this is the only thing that you could do. But of course, if you do this, it would be a huge political mess, and then it could get out of control, the whole thing. There could be a huge banking crisis and sovereign debt crisis over Europe. That is why they probably won't do such a thing.
What was the exact ECB's role in the Greece debt crisis? In your book, The Tragedy of the Euro, you claim that ECB has facilitated the Greek government to go more and more into debt, and at an ever cheaper price. Can you explain shortly the mechanics behind that?
For one, the Eurozone or the Euro area, the Euro allowed southern countries, also Greece, to indebt themselves at rates very close to German debts, German bonds. Why? Because investors thought that, well, if bad comes to worse, if there's a really bad situation, then at the end, countries that have difficulties will be bailed out by stronger countries. So, for example, if Greece gets into difficulties, the German government will bail it out. And therefore, the risk premium on the Greek government bonds fell almost to the level of German government bonds. Now we know that this speculation that investors did was totally correct. There was a crisis situation, and indeed, the Greek government was bailed out. So this is one reason why the interest rates on Greek government bonds fell, and also the inflation rate fell. Outside the euro, Greece had traditionally higher inflation. Once you get in, you get the supposedly conservative policy of the ECB that is akin to the Bundesbank, and in effect it's also located in Frankfurt, so it's basically a copy. So it goes the story of the Bundesbank, and therefore inflationary expectations fell. And then this is another reason why interest rates came down. How is the mechanism? Well, the mechanism is the Greek government spends more than it receives in taxes, and for the differences it prints paper, but not paper money, just paper where it writes government bond, Greek government bond. The Greek banks buy these bonds and refinance themselves through the ECB. They take these government bonds, show it to the ECB and say, hey, I give you this as collateral, please give me another loan. And then the ECB basically prints new money or produces new money in their computers and gives a loan to Greek banks. And then the money supply increases and prices tend to increase. So this is an indirect way to finance to monetize the Greek government debt. It's not directly monetized, the ECB buys them, but the Greek banks buy the Greek government debt, go with the debt to the ECB, and receive new money from the ECB.
There is something highly topical these days, the so-called quantitative easing. ECB tries to emulate the Fed. Will it succeed in stimulating demand and in fighting deflation, or some market and real economy distortions are on the horizon?
No. Basically, the answer is no, it will not stimulate the economy. What are the problems in the Eurozone? There are first structural problems, that some sectors are too big. For example, the construction sector in Spain. Other sectors are too small. The government sector is too big. So resources should be reshuffled. They should flow out of the construction sector, for example, in Spain, to other sectors. They should flow out of the government sector and flow into the private sector. The other problem is the over-indebtedness. Like private citizens are over-indebted, governments are over-indebted. As long as these people are over-indebted, they will not invest anymore, and they will try to pay down their debts until they get to a situation where they feel okay with their debt levels and start to invest and consume again. Are these two problems of structural problems, misallocations, and over-indebtedness solved by printing new money? Obviously not. Printing new money, quantitative easing, are not solving these two problems. The opposite is the case. If quantitative easing can lead to a tendency to lower interest rates, so it makes more debts more attractive. So it invites governments to indebt themselves even more, and it disincentivizes private people to reduce their debts and tries to push them to go into even more debt. And of course, the structural problems are not solved by money printing either. Money printing, quantitative easing, does not solve the structural problems. It slows down the readjustment because it gives easy financing to the companies in the bubble sectors. For example, it allows to constructors in Spain to survive, to refinance themselves. So factors of production are not released in these sectors and can flow to other sectors. And it allows to the government to suck up ever more resources, ever more factors of production into the public sector. And these factors of production are not released towards the private sector. And the savings of the private sector are sucked up by the government and cannot be used for new investment projects in the private sector. So it's exactly the opposite. The restructuring of the economy is slowing down due to quantitative easing, and the over-indebtedness is the reduction of the over-indebtedness is also slowing down. And in the worst case, the quantitative easing leads to even more malinvestments and to even higher debts.
Let's finish this interesting conversation with a recommendation of yours. Should Bulgaria take its chance and strive entering the Eurozone?
Well, as I said, if you're, as I understand, you now have a currency board. To go into the Eurozone, you're tying yourself even stronger to the monetary policy in Frankfurt of the ECB and to this construction error. As I said, the Eurozone has a construction error that is that independent governments can indirectly use one printing press to finance themselves, and this leads to conflicts, to moral hazard, and to pressure towards inflation. Okay, if you are like Zimbabwe, maybe it's good to join, because inflation will be lower than the crazy central bankers crazy central bankers in Zimbabwe would do. But if you could have a better monetary policy than the Eurozone has, and the Eurozone, as I said, has a tendency built in towards inflation, also towards conflicts about monetary policy, and towards problems. There's a possible breakdown of the monetary union. Then you might not want to do it. Look at Switzerland. Switzerland, in principle, could or did in the past a monetary policy that was better than most countries. The Swiss franc was appreciating over the last 50, 60 years. Then they decided to join the Eurozone. It's partly joining by tying themselves to the Eurozone. Of course, the Eurozone is a sinking ship, a sinking boat. It goes underwater. And then the Swiss, at some point, after already being half underwater with the ECB, with the Eurozone, they decided to cut the link with them and have to freeze their currency. So if you're Bulgaria, you have to think, if you want to join the Eurozone, then you are tied to a sinking ship, which may be still better than being a submarine like Zimbabwe, being underwater all the time. But surely you could do better. You could do better having your independent monetary policy or even better, by doing a monetary reform and introducing sound money, for example, a gold standard.
Thank you once again for being with us. Thank you for your interesting and insightful comment. Hopefully we are going to see you in Bulgaria in the near future. It would be a great pleasure for us.
Yeah, I hope so. I hope so too. Thank you very much.